How is it possible that billionaires legally pay less taxes than you? While you stress over your paycheck deductions, the ultra-wealthy are sitting comfortably, sipping champagne, and smiling at their accountant's clever moves. And the shocking part? It's all 100% legal. Today, we're pulling back the curtain on how billionaires legally pay less taxes than you, and how you can too. But here's the twist. By the time we hit Strategy 5, you'll realize the tax game is stacked against the uninformed. Stick around because I'll show you how to flip the script. Before we dive deeper, don't forget to hit that subscribe button and join our community of future millionaires, so you never miss insights like this one. The first secret? Billionaires don't rely on salaries. Unlike most people, they avoid W-2 income like it's radioactive. Why? Because earned income is taxed at the highest rates. Instead, they take wealth in capital gains, dividends, and equity. As Robert Kiyosaki once said, "The rich don't work for money, they make money work for them." And that's exactly what billionaires do. They skip the rat race of high-taxed earned income and focus on wealth streams that the tax code treats more kindly. Let me ask you, if you could choose between paying 37% tax on your income or 15% on your capital gains, which would you pick? Billionaires pick option B every single time. Here's the playbook. They take stock options, bonuses in equity, or ownership stakes. These methods are taxed at lower long-term capital gains rates, keeping more wealth in their pocket. Have you ever thought about negotiating for ownership or equity instead of a paycheck? Drop your answer below, and wait until Strategy 4, where we'll expose how they borrow money tax-free. It will change how you think about wealth forever. All right, let's dive into the next strategy on how the rich pay less taxes than you. Here's where it gets next level. Billionaires don't just own companies, they use them as legal tax shelters. Take Jeff Bezos. Amazon reinvests huge profits back into R&D, infrastructure, and growth, allowing them to legally reduce taxable income. The rich use corporations to deduct everything from travel to dinners, because if it's for the business, it's a write-off. But here's the hidden gem. Corporations give billionaires access to benefits you'd never unlock as a regular employee. From executive health plans to company vehicles, they funnel personal expenses into business write-offs, reducing taxable income while upgrading their lifestyle. How can you apply this? Even a small LLC can unlock deductions. Meals, home office expenses, mileage, that software you use daily, even that laptop you're watching this on, when used correctly, can reduce your taxable income and free up cash flow. Would you like a deeper breakdown on legal business deductions? Comment tax below, and I'll make a video diving into this. Moving on to the next strategy. Rich people own assets that generate write-offs. Real estate is the billionaire's favorite playground, and here's why. It's an asset that generates income and tax deductions. Rental properties allow you to claim depreciation, essentially a paper loss, while you're making real cash flow. Imagine collecting rent monthly while writing off property wear and tear. And here's the kicker. Depreciation often exceeds the actual cash expenses, creating a loss on paper that offsets other taxable income. But billionaires don't stop at basic rentals. They dive into commercial real estate, luxury developments, and massive portfolios that allow them to write off millions in depreciation. Some even use cost segregation studies to accelerate depreciation and slash their taxes in the early years of ownership. Here is the deal. Billionaires don't just buy assets. They buy assets that shelter their income from taxes while compounding wealth. How can you apply this? Learn about real estate investing, REITs, or partnerships that allow you to access depreciation benefits without buying entire buildings yourself. But stay tuned for method number 4. This is where that tax-free borrowing secret from the intro is finally revealed. Let's keep the momentum going as we dive into Strategy 4. the insider secret to how billionaires legally pay less taxes than you. Get ready to uncover their playbook and learn how you can leverage the same strategies to your advantage. Remember earlier when I said billionaires borrow money tax-free? Well, this is it. And trust me, it's wilder than you imagined. Billionaires rarely sell assets like stocks or real estate because that would trigger taxes. Instead, they borrow against their assets at ultra-low interest rates, often below inflation. This means they get immediate cash without ever selling or paying capital gains taxes. Elon Musk? He funds his lifestyle by borrowing against his Tesla shares, sidestepping taxes legally. The banks love it because they're lending against rock-solid collateral. But here's the twist. By borrowing instead of selling, billionaires not only avoid taxes, they keep their assets growing, compounding in the background. It's like accessing cash while your investments continue to work for you. How can you apply this? If you own property or investments, consider HELOCs or margin loans to strategically access cash without liquidating. Consider this. Would you rather pay low interest on a loan or hand over thousands in taxes to the IRS? Let me know below. Now let's see how the rich protect their family's wealth for generations while dodging estate taxes. Welcome to the billionaire's long game, Dynasty trusts. These legal structures allow the ultra-wealthy to pass down massive fortunes without triggering estate taxes. The Rockefellers mastered this move over a century ago, and their trust is still funding generations today. How? By keeping wealth locked in a trust that compounds tax-free while shielding it from probate courts, creditors, and even bad financial decisions by future heirs. But here's the power move. Trusts don't just protect wealth. They're designed to control how it's distributed, ensuring the money builds legacies, not liabilities. Billionaires often pair dynasty trusts with life insurance and investment portfolios that grow untouched for decades. How can you take these principles and make them your own? Even if you're not a Rockefeller, you can set up a revocable living trust to protect your assets and save your family legal headaches and taxes down the line. Have you thought about creating generational wealth for your family? Comment legacy below if you'd like me to cover trust-building strategies in depth. And don't go anywhere, because in Strategy 7, we'll reveal how billionaires flip losses into tax-winning strategies you probably never learned in school. All right, let's explore an intriguing strategy: how the rich turn philanthropy into a win-win. Sure, billionaires love to give, but let's be honest, they're also masters of turning generosity into tax strategy. Take Bill Gates. Through the Gates Foundation, he funnels billions into global causes, but also slashes his taxable income. How? Donations to qualified charities reduce their taxable income dollar for dollar, sometimes creating deductions so large they can carry them over for years. But here's the insider secret. Foundations allow billionaires to grow donations tax-free inside the entity before distributing them. Some even invest these charitable dollars, creating a second stream of wealth while securing massive tax shields. The result? They keep capital compounding and still look like heroes. Even more strategic? Many billionaires set up private foundations, giving them full control over how donations are distributed, and enjoying perks like family salaries, travel expenses, and even influence over public policy. How can you take these principles and make them your own? Start small. Donate to qualified 501(c)(3) organizations, or set up a donor-advised fund to gain tax benefits while supporting causes you care about. Would you like me to create a video on how to structure a personal or family foundation? Comment "Give" below. Let's keep the energy alive as we uncover Strategy 7, a brilliant move where the rich embrace paper losses. Remember our earlier conversation. Let's break it down. Billionaires don't fear losses. They weaponize them. Ever wonder how blockbuster movies like Harry Potter or Forrest Gump lost money on paper despite making billions at the box office? Welcome to Hollywood accounting, where studios inflate costs, create internal charges, and walk away with tax-deductible losses while secretly banking profits elsewhere. Real estate moguls play a similar game. Properties that generate massive cash flow are often depreciated on paper, showing a loss while the owner collects rent and builds equity. But billionaires also love tax loss harvesting, where they sell underperforming assets to offset gains elsewhere, shrinking their tax bills even further. How to elevate your game. It is called mindset shift. When you change your mindset, you don't just level up, you create a whole new playing field. The rich don't just accept losses, they engineer them to win the tax game. Wondering how to use this knowledge? Speak with a tax professional about using depreciation, business losses, or investment tax loss harvesting to your advantage. Want me to break down Hollywood accounting and how billionaires legally cook the books? Comment. Movies below. Let's shift gears and uncover another brilliant move in the billionaire playbook and uncover how they legally pay less taxes than you. Here's a low-key favorite among the rich. Municipal bonds, or as insiders call them, munis. Why? Because the interest earned on most municipal bonds is exempt from federal income taxes and, in many cases, state and local taxes, too. That's music to the ears of anyone looking to park millions without Uncle Sam taking a bite. But billionaires take it a step further. They build massive portfolios of munis from AAA-rated municipalities, meaning ultra-safe and tax-efficient. Some even use municipal bond funds to diversify across states, balancing risk while locking in tax-free income. The real kicker? Munis provide predictable cash flow, which helps billionaires reduce reliance on taxable stock dividends or interest-heavy investments. These bonds fund projects like schools, hospitals, and infrastructure, so billionaires get to grow wealth quietly while funding public good. How can you apply this? Even on a smaller scale, you can invest in municipal bonds to create a tax-free income stream, reduce risk, and add stability to your portfolio. Consider this. Would you prioritize tax-free safety or high-risk growth when investing? And stick around because we are about to unlock how billionaires relocate to legally escape millions in taxes. Ever wonder why so many billionaires move to places like Florida or Texas? It's simple. No state income tax. States like Nevada, Wyoming, and even Puerto Rico are also on their radar, offering significant tax incentives. But it gets even more extreme. Some billionaires go international, moving to countries with territorial tax systems like Panama or Singapore, where only local income is taxed. Others leverage dual citizenship to unlock tax-friendly treaties or programs like Portugal's Golden Visa. For them, relocation isn't about palm trees. It's a strategic maneuver to legally save millions and reinvest that cash into assets or businesses. Wondering how this can fit into your financial game plan? Consider your state's tax environment and how relocating, even temporarily, might accelerate your financial goals and open doors to wealth strategies. Would you ever move to a new state or country to save on taxes? Drop yes or no below. Let's charge ahead into Strategy 10. Remember earlier when we mentioned trusts and dynasties in Strategy 5? This is another wealth fortress billionaires love to build. Some set up multiple corporations, LLCs, S-Corp, C-Corp, to divide and conquer. Why? Because separating assets and income streams into different entities minimizes exposure to lawsuits, audits, and unexpected liabilities. If one company faces legal trouble, the others remain protected. But here's the advanced move. Billionaires use this strategy to create intercompany transactions, shifting profits between entities to strategically lower tax burdens. Some even set up corporations in different states or countries to take advantage of local tax codes. Think of it like playing chess with the IRS. Every entity is a new piece on the board, giving them options and flexibility to legally protect and optimize their wealth. How can you apply this? If you run a business, own real estate, or manage investments, speak with a financial expert about whether setting up multiple entities could reduce your tax exposure and increase protection. Stick around for Strategy 12. It's one of the most aggressive but fully legal strategies billionaires quietly use to protect and grow their fortunes. Let's shift gears and uncover another brilliant move billionaires apply to pay less taxes than you. They give away stock. Cash donations, that's for amateurs. Billionaires donate appreciated stock to avoid capital gains taxes while still claiming the full charitable deduction. Warren Buffett has mastered this for decades. Instead of selling shares of Berkshire Hathaway and paying millions in taxes, he gifts them directly to foundations like the Gates Foundation, sidestepping capital gains and scoring tax deductions at full market value. But here's where it gets even smarter. This strategy also allows them to rebalance their portfolios without triggering tax bills. Plus, the charity receives the full value of the stock, and the billionaire gets to offset taxable income, a win-win. Wondering how to apply this? If you've got stocks, ETFs, or even cryptocurrency that has appreciated, consider donating it directly to qualified charities to maximize the impact and minimize your tax bill. Let's keep the energy alive as we uncover Strategy 12, understanding how the rich use offshore accounts. Remember that spy movie tactic? This one's very real and perfectly legal when done right. Billionaires often park millions offshore in places like the Cayman Islands, Switzerland, or Singapore. Why? To take advantage of territorial tax systems, asset protection laws, and banking secrecy. These accounts help shield wealth from creditors, lawsuits, and even unstable political climates. But don't confuse this with shady tax evasion. The ultra-wealthy work with top legal teams to structure offshore trusts and corporate entities that comply with international law. How can you apply this? While you might not need a Swiss vault just yet, learning about international diversification could help protect your assets from local economic downturns or legal risks. Do you think offshore banking is a smart strategy or too risky? Comment below. Moving forward, let's dive into our next strategy, life insurance. Do you recall our earlier conversation about dynasties and trusts? Life insurance is another cornerstone in that legacy-building toolkit. Billionaires don't just buy life insurance for peace of mind. They use permanent life insurance policies to quietly move millions to the next generation tax-free. Here's the magic. Policies like Whole Life or Indexed Universal Life, IUL, allow the cash value to grow tax-deferred while offering liquidity through tax-free loans against the policy. It's like having a private vault where money compounds quietly, shielded from both Uncle Sam and market volatility. Many pair these policies with irrevocable life insurance trusts, ILITs, which protect the policy from estate taxes while guaranteeing heirs receive wealth seamlessly. Wondering how this can fit into your financial game plan? Research permanent life insurance and how it can complement your trust or estate plan to create a bulletproof legacy. Up next, let's talk about the hidden retirement strategies billionaires rely on to amplify their wealth. Billionaires don't just max out retirement accounts, they turn them into tax-deferred wealth machines. While the average person contributes to a 401(k) and calls it a day, billionaires leverage SEP IRAs, solo 401(k)s, and cash balance pension plans to stash away 6- and 7-figure amounts, all sheltered from taxes until withdrawal. Here's the twist. Many also combine these with self-directed retirement accounts, allowing them to invest in alternative assets like private equity, real estate, or venture capital, all inside a tax-advantaged wrapper. This means they're growing massive wealth, tax-deferred, while still playing outside Wall Street's sandbox. How can you apply this? Even on a smaller scale, max out your traditional or Roth IRA, 401(k), or explore setting up a solo 401(k) if you have a side hustle or business. Now let's move on to the next strategy billionaires use to turn taxes into growth engines. Earlier, we discussed how the rich turn paper losses into tax wins. Here's another advanced play, opportunity zones. These zones were created under the Tax Cuts and Jobs Act of 2017 to stimulate investment in underdeveloped or distressed areas. But here's what the ultra-wealthy saw immediately. It's a tax deferral and elimination goldmine. By rolling capital gains from other investments into qualified opportunity funds, QOFs, billionaires can defer taxes on those gains, and if they hold the investment for 10+ years, they could eliminate capital gains taxes entirely on the new appreciation. It's the perfect combination of impact investing and massive tax breaks. Some even strategically time asset sales to funnel gains directly into these funds, creating a continuous wealth-growing pipeline with minimized tax friction. Wondering how this can fit into your financial game plan? Look into Opportunity Zone funds if you're interested in real estate or private equity, and consult with a pro on how to align them with your investment strategy. Ever heard of Opportunity Zones before? Comment O's if this is new to you. All right, let's move on to the next hidden secret. The rich automate their tax strategy. Billionaires don't treat taxes like a once-a-year scramble. They build tax optimization into their daily operations. Their secret weapon? Automation. They use software to track every deductible dollar in real time, whether it's mileage, travel expenses, or asset depreciation. High-net-worth individuals also automate tax loss harvesting, selling losing investments to offset gains automatically, all while sleeping soundly at night. And let's not forget the family office teams, CPAs, estate planners, and legal experts who fine-tune their tax strategy every quarter, ensuring they capture every possible deduction, credit, and tax shield. How can you apply this knowledge? Even without millions, you can automate your strategy using apps like QuickBooks, FreshBooks, or by hiring a savvy accountant to ensure nothing slips through the cracks. Moving on to the next strategy. Rich people buy business, not just products. Here's a billionaire truth bomb. They focus on buying cash-flowing businesses, not just consuming products. Remember how I mentioned earlier that the tax game is stacked against the uninformed? This is a prime example. Billionaires don't just play the game, they own the chessboard. Jeff Bezos didn't just browse bookstores, he bought the entire bookstore model, creating Amazon and transforming how the world shops. Billionaires look for systems and platforms they can scale, automate, and, here's the kicker, take tax deductions from. When you own a business, you unlock write-offs, depreciation, and asset protection. A $1,000 suit is just a personal expense for a consumer. But for a CEO meeting clients, it could be a legitimate deduction. How can you apply this? Look for ways to invest in or create income-producing ventures that not only grow your wealth but also provide tax-saving opportunities. Moving forward, billionaires never settle for just one income stream. One job? One business? Not enough. Billionaires believe that one stream of income is too close to zero. They diversify with multiple income streams: real estate, stocks, private equity, licensing deals, royalties, and businesses. Why? Because each stream carries its own tax benefits, risk profile, and growth potential. If one dries up, 5 more keep flowing. Remember earlier when we discussed Strategy 7? How billionaires use real estate for paper losses. That's just one part of the puzzle. They layer real estate with dividend-yielding stocks, high-margin businesses, and intellectual property, think patents and licensing, to create unstoppable tax-optimized cash flow machines. How can you use this knowledge? Start with your first or second side hustle. Invest in an asset that grows passively, or explore online businesses to begin stacking streams. Let's jump into the next strategy. The rich build powerful networks. Earlier in Strategy 10, we revealed how billionaires create multiple corporations to shield income. But here's the catch. Many of those corporations are born from strategic relationships. Billionaires don't just network for business cards, they strategically invest in people. Whether it's attending elite masterminds, sitting on nonprofit boards, or forming private partnerships, they build circles where deals, investments, and inside knowledge flow like champagne at a gala. They also tap into these networks for tax-advantaged opportunities, like private equity deals that offer carried interest tax treatment or partnerships in opportunity zone funds. How can you apply this? Start curating your circle, attend conferences, join industry groups, or reach out to mentors. The right connection could unlock new streams of wealth and powerful tax strategies. Here is a quick question. Have you leveraged your network for financial opportunities yet? Let us know below. Strategy 20. Billionaires think legacy, not just profits. Remember how back in Tactic 5 we talked about building dynasties with trusts? This final strategy is where billionaires shift from wealth creators to legacy architects. They're not chasing just the next business deal. They're playing a multi-generational game. Legacy means setting up systems that protect and grow wealth for 50, 100, or even 200 years. That's why you see names like Rockefeller, Rothschild, and Walton still dominating headlines decades later. Legacy-minded billionaires blend trusts, foundations, and family governance structures to pass down not only assets, but also values, business blueprints, and philanthropic missions that influence entire industries. How can you take these principles and make them your own? Define your long-term financial mission today. Is it to create security for your children, build a business empire, or fund causes bigger than yourself? So now that we've unlocked the full blueprint on how billionaires legally pay less taxes than you, and how you can too, what's the biggest takeaway? It's that the wealthy don't play the same game. They engineer their finances around ownership, optimization, and legacy, while most people are stuck stressing over paycheck deductions. But here's the good news. You can apply the same principles right now. Here's how you can apply these strategies today. Strategy 1. Shift from earned income to ownership. Think equity, real estate, or side ventures. Strategy 2. Unlock legal tax deductions. Set up a business or LLC, even if small. Strategy 3. Think long-term. Start exploring trusts, estate planning, and building your financial legacy. Strategy 4. Stack multiple income streams. One stream, risky. More streams, security. Strategy 5. Automate your tax plan. Use tools or experts to maximize every advantage. Which of these billionaire secrets and strategies surprised you the most? If you found this video valuable, I highly recommend watching my next video, which is the perfect complement to this one. Don't hesitate to share this video, subscribe to our channel, and share your thoughts in the comments section. Thanks for watching, and I'll see you in my next video. Until next time, keep learning, keep growing, and remember, financial freedom isn't a dream, it's a strategy.